Hello and welcome back to the second day of the FBAA 2020 Industry Commercial e-Masterclass. This is a great idea. Now, this Masterclass, of course, runs over the week with different content coming to you each day from experts within the commercial lending space, and tips on best practices will be the fare for each day. The content will really assist you to diversify or thrive within the commercial lending space to assist your clients coming out of COVID-19 and all the trappings and problems we've got with that. And planning ahead for future scenarios is critically important, and this will help you do that. Please jump onto the FBAA website and click on the upcoming webinars to register for any other sessions or the live panel session on Friday the 24th of July. Now, a few housekeeping matters before we get started. There is half or 0.5 CPD points allocated for today's session. However, please ensure you watch throughout the whole session to ensure your attendance is marked, and then you'll receive an email following the session with the CPD code and feedback survey to complete. Now, a huge thank you to our sponsors is always necessary. We have our platinum sponsor, Lend, and our MC sponsor, Speedy Finance. You'll be hearing from both of them later today. Without them, this wouldn't have been possible. And then there are the content presenters who have given up their time to compile this information and assist you throughout the commercial lending space and within these trying times. Now, please also refer to the Industry Commercial Masterclass ebook that you can download as a PDF from the FBAA website, which outlines all the presented details and the company information, the agenda for the week, and other beneficial info, which will help you for sure. So let's get started, and I'll introduce our first speakers. We've got Pead, Vala and Amundsen from ThinkTank. Now, they're going to be presenting on a really important topic, the COVID-19 effects on self-managed super funds during and exiting the event. Does the company's cash flow also impact on SMSF transactions? So take it away, Pead and Pead.
Thanks, Peter. Thanks for the opportunity to be here today and have a chat to you all in regards to some more COVID-19 things in regards to this case, SMSF. I'm joined today with Per Amundsen. Pead, g'day. Thanks for joining us.
How are you?
Appropriately distanced, social distancing, absolutely. 1.5 meters, absolutely.
And it's great to communicate with people in a new way, eh?
Absolutely.
Good opportunity. So thank you for letting us join you.
Absolutely. No, thank you so much for joining us. We're going to be talking about a few things here and about SMSFs and the COVID-19 experience of what's happening coming in and coming out, and actually some that are still in this position at the moment with COVID-19. But there's obviously cash flows of businesses and so forth that are going to affect this as well, just like any other business that have got some issues and stuff.
Absolutely.
But obviously, before we talk about any of these sort of things, what I do need to cover off with you is that we can't give you financial advice. It's the usual disclaimer that's sitting here. We can't give you financial advice, so please make sure if you need to discuss anything of this nature, that you actually talk to a licensed professional, and that can help you in that regard. So we're just going to have general discussions on a few different things, okay? So just a quick recap, some previous sessions we've done for these masterclasses for the FBAA over the last few years, we've spoken about SMSF and a whole lot of different structures and things you can do. But just as a recap, you'd know that the SMSF structure has an SMSF and a bear trust involved. And it's the bear trust that actually gives the mortgage and beneficially holds the property. And you'd also know that it's the actual SMSF that signs the loan agreement, actually facilitates that transaction with its cash, right? Now, there was some talk at one stage, whilst you can have 4 members in an SMSF, there was some talk that this was going to go to 6 members. Did that happen, Per? We spoke about it a year ago.
But listen, it seemed to be really close. And this was just prior to the last federal election. It was quite close. The legislation had actually been drawn up, as far as I know, but it was never presented. In fact, it was withdrawn, and it died with the election. And you don't hear too much about it.
No resurrection?
Well, who knows? Who knows? But not right now.
Not right now. Okay. So just as a quick recap, nothing's really changed, I presume, Per, in regards to the limits of concessional and non-concessional contributions that you can make in an SMSF?
No, with regard to that, there hasn't been any change. There was a very recently announced change with respect to how the Bear Trust and the SMSF trustee would work. I must say in the consultation period, I wasn't really clear on what benefit there was in doing this, and I kind of think it was for historical reasons. But thus far, we just are not changing anything that we do in regard to the Bear trustee and the SMSF trustee interact as per your slide.
Great. And the incomes and so forth, like we said, nothing's changed. The board rules.
Nothing's changed at all in that. No.
Okay. So again, if I wanted to buy a property in my SMSF, this is commercial or residential property, it's still a single acquirable asset. Nothing's changed in that regard.
That hasn't changed. The SIS Act and everything that goes with that continue to require that a single acquirable asset match up with each LRDA, match up with each Bear Trust. So you can't have, 2 or 3 in the same transaction. There are 1 or 2 exceptions when you have a building that's actually built over 2 or 3 titles, but those are rare and they're fairly well understood, I think.
Sure. Okay, great. So let's talk about something a bit different. Can you, we know residential can't, but if I buy a commercial property, can I still have my own business as the tenant in a commercial property, right?
You can.
Property.
And this is an exception that exists within the SIS Act, because normally if it's an associated owner or an associated tenant, you get into in-house asset rules. This is an exception specifically for, just as you've described it, business real property. And what does that mean? It means a property that's used wholly and exclusively for business purposes.
But does it got to be a market rate, or can I do unders and overs? Because it's my own business. Can I go unders?
No, it has to be market rate. And the reason they do that is so that you don't give a benefit to someone outside the members
of the actual fund.
Right,
I got it. So if I've got a third party tenant in there, that's okay, obviously, because it's a market rent and so forth. But if they can't make their loan repayments just in normal times at the moment, do I have the same abilities as any other landlord to make them pay, or like any other?
This is such a good question, because during COVID-19, the number of hardship cases are really, very large, and they apply and impact on people who have their properties in their SMSS just as much as they do to people who own properties in other structures, either individual names or a trust or a company. Very wisely, what the tax office, the ATO, the regulator, has done is said that they will accept that you provide hardship provisions to a related party as long as they are commercial.
So hang on. So the first thing I was saying, like, if it's a arm's length tenant,
yes,
you can treat an arm's length tenant the same way as a related party tenant. So if my business can't afford to make the repayments as a related party,
that's right,
I can get the same benefits even though I'm a related party under the COVID-19 provisions.
That's right. Here's the big emphasis that the ATO has put out, and that also applies to really doing this sort of thing just with other unrelated parties, third parties. Make sure it's properly documented. Don't just say, oh yeah, well, we're just not going to pay the rent, so we'll just leave it without any payments, and we'll go to our lender, say it's ThinkTank, and say, oh, can I have some relief because my tenant isn't paying rent?
So if I'm my own tenant in my SMSF and my company is suffering hardship and I can't make the repayments to my SMSF, can I renegotiate that lease then as per any other tenant?
Yes, you can.
Even though it would be way under market rent at that time.
You could do, as long as it makes commercial sense, and you've got to be able to document it and be able to prove it to the ATO when they ask that question.
Okay, so in the same way, like there are some loans that have been deferring their repayments as well, right? For like there are some property deals we've done where people have asked for a deferment arrangement.
Correct.
Can an SMSF ask for a deferment as well, just like any other holding company or SPV or borrower?
Yes, they can. They can, and we've had situations where we've granted that, and we approach it in exactly the same way we would another lender. There are some little exceptions, and I think we might touch on those because they are quite important.
Okay.
I might just start with some that we can do different things with non-SMSF borrowers. The only thing we can do with an SMSF borrower, and this is because of the regulations governing the loans, is we can forego the interest, so defer the interest. We don't actually forgive it, but we defer the interest, but it then gets capitalized.
Well, I didn't think you were that. I thought you can only put money in like your 25,000, your 300,000.
Yeah,
that's it. So
exactly.
Capitalization interest doesn't count.
Well, it's an exception again. It is considered a cost, and costs are allowed to be added to the principal amount of an LRVA. You can't otherwise increase an LRVA.
Yeah, because you can't redraw and you can't get cash out from
that's
SMSF.
Right. And so with other loans, sometimes people are ahead in their payments, and we allow them to redraw as a form of deferral. You can't do that with an LRVA. All you can do is allow the interest to be capitalized to the loan balance and then get repaid over the remaining term of the loan once things return to normal.
So you can cap out the interest. All right.
That's right, and it's specifically allowed for, and it's not just in one of these rulings. It's actually in Section 67A of the SIS Act.
But if I can capitalise the interest, I guess the question for me would be: is let's say that's 3 months, let's say, and let's say a lender says, okay, look, here's 6 months you've got for this, and you capped it out. But let's say at this point the tenant still can't make the repayments, but I still got to start my loan repayments up. Yeah. Now, hypothetically, I could make something like $25,000 concessional contribution in. Correct. I could put that in.
Yeah.
Or I may have some headroom in my non-concessional contribution, right? But I could kick in as well, right? Now, but if I've used them up, look, I've recently bought a property last year, and I've used up all that 300 in equity, and I've now got the 25,000, which I was using for servicing. I can't put any more in either.
Yeah, you've been putting that in every year, exactly.
So I've capped out the interest, that's fine, but I want to put cash in, but I can't because I've used up my concessional, non-concessional. How can I make the loan repayments?
It's such a good question, Peter, and when it arose, I'll have to say, we just shook our heads and said, gee, what does a member do? Now, we're looking at a situation where there's one member, but say there are multiple members, but all of the things that Peter has just said could turn out to be the case, and then you're stuck. What do you do?
Well, that's why we're here. I think that's a great question. Thank you. So,
well, the good suggestion, and this came from Pead, so he gets the credit for it, is that maybe you go to your lender and you say, here's the situation. We can't put any more money into the SMSF. How about, would you be willing, if the valuation and all the other LVR is right, the business is right, to continue to capitalize that interest until we get to the next tax year so that I can put more money in?
So if the financial institution is happy to do that, let's say the LVR is right, there's no limitation to the amount of capitalisation on that loan until that window comes where I can put more money at the 25 or the 300,000 contribution?
No, there's no limitation.
So if I was at the right LVR and the lender was happy to hold it for that period of time,
that's right, knowing
there's an exit, there's a way to keep it afloat.
And listen, on average, our LRVAs are lower LVRs than most of our loans in our total portfolio. And so there's usually more room to do that sort of thing.
So just summarising those few points, because there's a fair bit we just covered. So if I've got an arm's length lease in place with my own business can claim hardship like it can. And I can also defer the repayments, and I can rewrite the leases under commercial terms, even if they're not market rates at that time.
Correct. As long as there's a commercial reason why you're doing this, you're not just doing it because you want to lower the rent. There's a genuine problem.
And capping the interest that we're talking about on an SMSF, if you're using a deferral arrangement for an SMSF, like some other loans have done, that interest is considered a cost, and therefore you can actually let it continue to capitalise. It's not breach anything else.
Absolutely right. Yeah, and that's the logic that the tax office has used in coming to that decision.
Okay. All right. So what about if I need to spend some more money? Let's say the tenant's gone sideways and I need to change the property now. I've got to do some capital works on it so I can attract a new tenant. Can I spend some money, or can I borrow some money to do this renovation work to attract a new tenant?
You can't borrow the money. That's one of the big restrictions. Once the LRBA is up and running, you can't go and say, I want to borrow more money. You can use money out of the SMSF. That's a possibility.
If there's cash reserves sitting in there.
Yeah,
right.
That's right. That's right.
So I can use that cash to do the renovation works to attract a new tenant, but no borrowing of funds.
That's right. And you do have to be careful about what you do, because the single acquirable asset, all the language around it that the tax office uses, it can't become a different property. So there are certain examples that they use in the rulings that identify, well, if you just put in a new kitchen, improve the kitchen, that's fine. That's really a renovation. But an improvement would be something, quite extreme, like adding another story, a second story to a single story building. That's it, because you're creating a different asset.
So there seems to be a lot of negatives at the moment on this place. Like, should I be be even looking at SMSF transactions? Because it would seem like this is just too hard. Like, if it goes sideways, it's just too hard to get out of or unwind or whatever I need to do.
Yeah, so, I know it's so
surely
interesting.
The market's dropped. Obviously.
Yep. The people that are watching us today, this was written a little while ago, but there was an article today in the Australian Financial Review that was asking exactly that question. Just today.
What's today's date?
Yeah. It's a couple of weeks probably ago when this is being viewed, but they were asking that question, and as I read it, I thought, they're just going down the wrong path, because they're digging up the old issues that there's systemic risk, that loans are going to destroy people's superannuation savings. I can tell you from the experience we have had, and I think COVID-19 will tend to be the test for how have certain types of lending performed. Our SMSF portfolio has outperformed other forms of lending. And I think that's what information will be gathered after the storm is over, and when people can coolly sit down and say, what's the outcome? What judgments can we come to? And I think the answer will be, hey, this is a good form of lending. It works really well for certain types of investments and investors, and it performs well in times of stress.
So there's still some opportunities, that's for sure.
Yeah.
And so I guess SMSF have always been used for like wealth creation, or to manage tax benefits and retirement benefits and asset protection especially. So all those things are still there.
Absolutely.
And there is some, it's not like SMSF was siloed on the side of this COVID-19, that they actually have the same sort of benefits as any other lender or any other borrower would have.
That's right. And we're finding we're doing just as much business as we were before the crisis. And in fact, just slightly a little bit more. So it's quite interesting.
In SMSF transactions.
Yeah.
Absolutely. So I know you're right in that regard, because we've been seeing a lot of in-specie transactions. And I've just thrown this slide up so just to quickly remind you, like where you may have a business real property and you can actually, which you currently own, you can sell to your SMSF.
Correct.
Even though I may not have the cash in my SMSF to complete the purchase from a funds position, I can effectively contribute the equity towards that. As an in-specie, because I don't speak Latin, so COVID-19. Sorry about that. So I don't speak Latin. So, but I guess it's just a fancy word for in kind.
In specie. So you could actually contribute the whole property.
Okay.
Yeah. Usually you can't do that because people will have a mortgage and they'll need some cash to take place, and that's where we come in terms of providing the LRBA. But you're exactly right. Usually the split is that the equity goes in as in specie, an in-kind contribution. And there are all sorts of benefits in terms of stamp duty that's excluded because
depending which state you're in.
That's true. That's true. But there usually is some concession.
And whilst it might trigger a CGT thing, there are benefits to small business operators that are selling their properties across, right?
Correct. The capital gains tax exemptions are important to know about. You have to have a good accountant a good advisor to work with those sorts of things, but you can do them. And the InSPC is frequently used, we find, in situations where older people or people who have owned the business for some time want to put it into their superannuation fund.
So Mel would have been talking about cash flows and businesses. I'm sure he spoke about, also getting to know your customer and your customers' businesses. So it's no different here, knowing your tenant, knowing the cash flow in your own business to make sure you can maintain these repayments to do what you need to do. But like we said, the availability of things are still there for SMSF investors as such. And we're seeing a lot of business still in this space. So people are actually still wanting to do residential and commercial SMSF transactions.
I would say that with respect to that, very quickly, we certainly are asking more questions, or at least going into more detail, and we would suggest the same is the way that every broker and every advisor should be approaching it.
When you're saying from a cash flow perspective, to make sure businesses are fine, or?
Exactly. Yeah,
So,
make sure that the cash flow is sustainable, make sure that you understand the cash flows, what's generating the cash flow, and to what degree are they at some form of risk because of COVID-19.
I don't think that's unreasonable sort of questions that you sort of ask from that point of view. Look, our time's gone really quick. I mean, it's 20 minutes. I can't believe how quickly that's gone, Pead, because we always tend to chat. But I think it's a great session in regards to just quickly touch on SMSF, knowing that there's still a market there, knowing that there's still ways forward, knowing that there's assistance for people that have got SMSF transactions that may have experienced some difficulties with COVID-19.
Correct.
There are ways forward, and there's other ways of thinking about things as well. But Pead, look, thank you so much for the time for this afternoon to put this together for this session.
Thanks,
in the masterclass. I think it was really, really good.
Yeah, as usual, great pleasure.
Absolutely. And if you've got any questions in regards to SMSF transactions, like we said, we can't give you financial advice, but you're more than welcome to send those questions to Mariah. And Mariah will send you an email soon after this session, and you'll have her email address on that. And please, if you've got any questions, send them out to her, and they'll be answered at the Friday session on the panel session. Now, I'll try and make sure Pead's there because he's the knowledge bank of ThinkTank. So we'll make sure he's there with me. I can't put in the eye candy, but anyway, but look, thank you very much, guys, for dialing in and listening to this. Great session. Back to you, Pead. Thank you so much. Bye.
Well, thank you, Peter and Per. And clearly, these are really important issues for self-managed super funds. I think you absolutely nailed what's really important at this point in time, given the challenges of COVID-19. Our next presenter is Danielle Brooks from Lend, the Platinum sponsor. Now, she's going to be presenting on a really important topic as well, alternate lending. So take it away, Donelle.
Thanks again, Peter, for the great introduction, and to Peter and Per from ThinkTank. It certainly is a different masterclass than the one last year where we got to travel around the country together. But look, it's a really good insight and quite interesting to understand how COVID and even cash flow has affected the SMSF space. So it really probably leads in really well into our presentation on alternate lending, what that looks like now with what we call the COVID-19 effect. So let's get started. So look, why businesses use the alternate commercial lending market? We know that it's because financials are not up to date, ATO debt, speed of funding, flexibility of payments, term flexibility, multiple loan purposes or product combinations, and credit impairment. So we know that there's a lot of inconsistency in credit reporting, and so we find that alternate lenders are really happy to see and listen to the story in the credit file rather than always just relying on a band score. So the top 8 SME products, and you can choose your product type that best suits your client, and that really speaks to, I guess, what we've heard from some of our presenters during Masterclass is around really understanding your client and their story. So are they seeking equipment and asset finance? Is it invoice or trade finance? Unsecured short-term loans or secured? Private lending, line of credit, overdraft facility, and the merchant cash facility. Now, we've all spoken about diversify or die, as opposed to the new buzzword, which is let's pivot our business. So while you're pivoting your business, how do you attract clients? So for our brokers who already work in the resi space, lots of your clients are business owners. get this text message out that you can see on the screen. Get an email out. Let your existing base know that you've got this finance on offer. Really, really important. Tap into your other professional alliances, accountants, financial advisors, insurance brokers, planners. Those alliances of yours are visiting and talking to business clients every day, and also understand their pain points as to where finance may help them. Get yourself a dedicated landing page. It's not as expensive as building a full website, but get a dedicated landing page where you can direct traffic, direct emails, direct phone calls, direct inquiries. Really important. And last but not least, get on socials, get on LinkedIn, get on Facebook. Let your social network know that this is something that you now offer. So let's have a look at private lending and the COVID-19 effect on private lending. So there are three main reasons why someone would seek private funding. And basically you're looking at partially complete developments. So either the lender or the funder has run out of cash. You're looking at development funding, so construction or land subdivision deals. So options are available for no pre-sales, but pre-sales are actually preferred, but there are a few lenders who will do it. And then just typically your short-term lending requirements. So this could be for lots of reasons, whether it's a startup, purchasing an existing business, a stock purchase, expansion, bridging finance, all the typical short-term lending purposes, but we're using property as security. So let's have a look at some tips that we think are really important to take into consideration when getting the client story. So property prices are unknown as to how much they're going to drop. So that means that LVRs are definitely reduced from lenders. 65 to 75 is where you'll find resi sitting, 50 to 60 for commercial, and 50 for rural or land. Population and location is extremely important, and I'll touch on that in a second. And also about specialised security, and we'll touch on that too. Docs required really depends on the complexity of the deal, and exit strategy is super important and always required. Just remember that traditional cash flow lenders offering property security deals still require the ability to service, as opposed to just focusing on the equity and the exit strategy. Cash flow lenders are still looking at that ability to service. So to finish up, I want to talk about location and population and specialised security. So really, really hard when the population is low. And the reason why in these tiny towns and hamlets, obviously the population is low, but it's almost impossible to appraise the property as there tends to be hardly any comparable sales. And this makes desktop values extremely difficult. Specialised security, wineries, horse studs, etc., they're difficult to lend against, as it's nearly impossible to get a true handle on the property value without doing really slow and expensive full vows. So 50% LVR is where you can feel quite comfortable when it comes to specialised security in private lending. So they're the private lending tips to take on, and I know I'm moving fairly quickly, but you will have access to all of this information after the masterclass. So let's talk about unsecured lending, and we're going to go through the same things. So the first thing at the moment that's important is industry. So there's three ways that you can class your client, I guess, when you're getting that story and that profile. Are they a gold client? Have they maintained steady cash flow? Then they're a big tick. Are they a silver client? Have they maintained some sort of cash flow, at least a minimum of 50% of their pre-COVID sales, and they've continued to trade, whether they've pivoted their business into takeaway or hand sanitizers or face masks, or whether they've just been able to trade but affected. There's a little bit more scrutiny from credit on those deals. And unfortunately, your bronze deals are the ones that are hardest to get across the line. So whether that's industries that have been fully impacted with no lockdowns and absolutely no trade, but have expected to return to full trade. They're hard to get across the line, guys. They will get funded, but expect there to be a lot of scrutiny. So we've spoken about private lending, we've spoken about unsecured, and I guess now what we need to do is talk about the SME guarantee scheme. So currently on the Lend platform, we have 4 lenders offering the SME guarantee deal. It's not for everyone, but please know that Lumi, Prosper, Muller are all offering the service. So let's move on to the Lend platform. We know that it's the fastest and most sophisticated platform for Australian business brokers. It automates the process of matching a lender to a SME and uses a really sophisticated combination of AI and analytics. We know it's the all-in-one platform is probably one of the biggest features. Single app, instant analysis, best lender match. Choose the lender to send the app to. If they're unable to help, same application form, same bank statements for the next lender. Real-time status updates, end-to-end deal flow, serviceability calcs and CRM tools, and the process doesn't impact the client's credit file. So when we have a look at the magic of Lend Score, which you may want to know, and this comes with our bank statements technology and you get free access to it, and it gives you a score on the likelihood of your customer's loan being approved. Really great piece of technology, and you'll get to see it in play when you join the platform. And here's a couple of snapshots of the analysis. So there's a lot that's in this, and I'm just showing you 3 quick slides today. So there's decision metrics, revenue charts, day in balance charts, expenses, etc. So here's a quick look at the monthly revenue chart and the day in balance chart. So there's some great bank statement technology which can be a really good advice piece when talking to your clients. So last but not least, lend size is where we automate based on the information that you have given us through our profiling that we've done, the lender and the amount that they will consider when looking at your client's application. So again, understand the story. The platform will help you find the right lender. And just to finish up today, guys, just want to touch on the Lend ED series. Really important. You'll hear from all of these lenders about all of their products, and there's no ifs, buts or maybes. It's the real stuff. Who they're writing for, who they're not, and what pain points the clients are facing. So you'll get all of this information from the Lend ED series, understanding insight, answers, clarity, which in turn will improve your conversion and increase your commission. So you can reach out to me to get access to the platform, and we're very grateful to the FBAA for giving us CPD points for each episode that you watch. So thank you so much for your time, and thank you for putting up with my technical difficulties. They weren't too bad. I think I've had worse this week, but thank you so much for your time and taking the time out to participate in something that is really, really important right now. Thanks so much, and back to you, Peter.
Now, once again, very insightful observations about a really important topic. Okay, so today we've looked at the implications of COVID-19 on self-managed super funds. We looked at the important observations from Danielle Brooks about alternate lending. And our third presenter is Tanya Pead from Speedy Finance, the MC sponsor. Now, she's going to be talking to us about assisting yours and your borrower's cash flow. Take it away, Tanya.
Thank you, Peter, for that introduction, and welcome everyone. I'll be talking about assisting yours and your borrower's cash flow today. An introduction to Speedy, as I know a lot of you probably have not heard of Speedy Finance. They're a boutique lender that have actually been in operation for over 16 years. Originally, they were focused on small consumer debt, but due to COVID-19, there has been a bit of a refocus and a reshuffle with the business, and we're now looking at secured business lending as their primary product. Understanding that the third-party network would give them so much more reach, they decided to utilize the broker network, and that's where I've come on board. We've all heard the word diversification. It's been around for about 2 years, and that's where I'm going to come in as well. 30% of your borrowers will be self-employed. Are you utilising that database, and are you taking every opportunity that you can to earn extra income where you maybe not have had that opportunity to earn it before? Can you expand their business and think bigger? Give them alternates to the traditional residential mortgage. Speedy client is anyone who is self-employed and looking for funds for their business fast that can utilise the equity in their property. How can Speedy assist your clients and your cash flow? Access to funds from 10 to 250K pretty fast. We can offer approvals within 24 hours of submission, funding within 24 hours of settlement. Average time from submission to funding is 4 days. We've got two core products. We actually do have three, because we do have the SME government-backed loan product as well. But our core products, short-term interest only, 3 to 6 months. P&I term loan up to 24 months. Because we use a very simple referral system, you don't have to spend hours and hours putting an application together. You just give us the simple details and we'll do the rest for you. That gives you time to work on other deals that you can be earning income from as well. And we will do all the work for you in the background, and you've earned a good commission. Why use Speedy? We're a small business. We want to grow as you grow and as your clients' businesses grow. Our underwriting is really simple. We assess each deal on its own merits. We don't use an algorithm. We don't use a credit score system. We look at every single deal individually. You will have a dedicated underwriter that will work with your clients from start to finish. We are a fintech company. We use extensive fintech products to assess each deal, which makes the process so much faster and so much easier for our underwriters and your client. We do have a dedicated broker portal, which at any point you can go on there and have a look at any referrals that you've sent through and see what stage they're at, and know exactly where you stand, so you can get your commissions. Commissions are paid day after settlement, again, which helps your cash flow. Settlement is day of or day after the documents are received. And like I've said, we're one of the SME-backed government lenders. I don't have time to go through all our scenarios, but just really quickly, a good one for you just to understand is we had a business that was looking for funding for a project with another large company that would have seen them be able to put their products into a large retail chain. They had an ATO debt, they had another large business debt as well, plenty of equity in their property. We consolidated everything, gave them the capital that they needed, and which saw them double their turnover moving forward. Please reach out if you need anything, if you have any questions. I'll hand back to Peter. Thanks, Peter.
Thank you, Tanya. Any observation around cash flow is important for anyone in business and for our clients, obviously. Now, coming up tomorrow on Wednesday, we're looking at a submission writing with a COVID-19 tweak and commercial client interviews, research and preparation. That comes from ING. And once again, we'll be looking at alternate lending with Lend. Now, we're getting close to our close, and so it's really important for me to advise you to go to the FBAA website and click on the upcoming webinars to register for any other sessions or the live panel session on Friday. Thanks again to our platinum sponsor, Lend, and our MC sponsor, Speedy Finance. Without you on board, this wouldn't be possible. You'll be getting the presenter's contact details in the email following these sessions, so get in and contact them for more information. If you have any questions, don't forget to email them to Mariah, and they'll be answered on Friday at the live panel session. There is a CPD code that will be provided in the follow-up email and a short survey to complete with your feedback. So please take the time to fill this out. Thanks again, everyone, and enjoy the rest of the day. See you tomorrow.